This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, this is Bloomberg Businessweek Daily for this Thursday, October 30th.
Is it Thursday?
It's Cabbage Day. It's Cabbage Night.
What does that mean? You say this every year.
Do you know? Does anybody know what Cabbage Night?
Is this a New Jersey thing?
You go, I don't know whether it's Irish or whatever, but you go out and you wreak mayhem. My brothers used to do it big
Toilet
time.
paper involved?
You're throwing eggs, you're like,
okay.
I don't know. You're doing
this is like
things.
the pre-Halloween festivities in the new.
Yeah.
All right.
Yeah.
Stay away
Trick
from...
or treat. It's all about tricks.
Stay away from Carol
not tricks,
Stay away
but
from Carol
tricks.
Masser's house.
All right. Okay. Now that that's done, we got a lot going on. We do have the S&P 500 kind of hovering just off its record high, but we are looking at stocks. I mean, we have seen some back-to-back monthly gains, which is pretty wild. On track for its longest streak of monthly gains in 4 years. We're talking about the S&P 500. Maybe earnings tonight can help or hurt it.
Yeah, maybe up 2.6% on the S&P 500 for the month thus far. We have one more day tomorrow, 4.8% on the NASDAQ. Speaking of the companies that are moving the indexes, Microsoft, Meta, and Alphabet, as we await earnings from Amazon and Apple after the bell. We're going to catch up in just a few minutes with Mark Mahaney. You know him. He's over at Evercore ISI on all of that and more.
Yes, indeed. We're going to get into that. Also, tensions ease. An agreement is made. So all good between the United States and China? Question mark, question mark, question mark. We're going to ask Carolyn Freund. She's formerly of the World Bank, IMF, and the Fed. She looks at the relations, has for years, between the two giant economies in the world. So we're going to see what she says, whether or not we've seen progress, because what I heard is that in a year, we're going to talk again. I think I heard that from President Trump.
Well,
right?
a lot can happen between now and then.
Well, yeah, a lot. I mean, yeah. Exactly. Hey, we're also going to get into, we like to look at women's health because there's lots of gaps between women and men. It's important. Healthcare, certainly front and center. We're going to get into neurological concerns, and in particular, Alzheimer's, which is often called the women's disease. So we're going to get into that a little bit later on.
All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie.
Hi, thank you very much. And here's what's going on. Apple Day. We've got the Dow higher, S&P, NASDAQ. They are both moving lower. Wall Street pumping the brakes on a stock rally. Meta Platform shares now down by 10.2% amid plans to take on debt to fund its AI push. So here's where we stand. The S&P at 68.64, down now by 0.4%, lower by 25 points. The Dow higher all day, up 153 now, holding on to a gain of 0.3%. Could see another record close there. NASDAQ, though, selling off, down 215, down 0.9%. The Russell 2000 index of small cap shares, a little change, down under 0.1%. The Mag 7 index lower by 2.1%. This after earnings from Alphabet, Meta Platforms, and Microsoft. Your 10-year at 4.08% with a 2-year 3.60%. Gold is up $73 the ounce, back now above 4,003. We are looking at a gain there of 1.9%, and West Texas Intermediate crude up 0.3%, 60.65 a barrel on WTI. So again, bottom line here, Google up 3.1%, Meta down 10.2%, Microsoft down 2.8%, Apple after the bell up 0.8%, Amazon down now by 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Tell a big text. That's what we are all about. All right. So we have also been hearing from the heads of some of the biggest U.S. banks a lot. They reported earnings. We've gone through that, but they've been out and about at different events. And many have gathered this past week at the Future Investment Initiative, 9th annual conference. It's held in Riyadh, Saudi Arabia. Among those in attendance talking about credit concerns, the U.S. economy, the global economy, AI and investment opportunities in the Middle East. We've seen Citi CEO Jane Fraser there, Ron O'Hanley, Chairman and CEO of State Street, Jamie Dimon, of course, CEO and Chairman of JP Morgan Chase. We've had the CEO of HSBC, and then Steve Schwartzman, co-founder, chairman, and CEO of the Blackstone Group, and a lot more. I've got to say, the list of folks, and we've been on the ground covering them. If you've missed these interviews, check it out on the Bloomberg and at Bloomberg.com. But that list, it's the biggest financial folks in the world, and certainly in the U.S., Tim. And it's a lot of global CEOs. Intel CEO is there. It's a lot of well-known names.
Well, David Solomon, chairman and CEO of Goldman Sachs, he was also at the event in Saudi Arabia, though today he was back in the U.S. in Washington, D.C., sat for an interview with Carlyle co-founder and co-chair David Rubenstein, hosted by the Economic Club of Washington. They had a wide-ranging conversation. David Solomon, though, talking about the possible, quote, reckoning that may be coming for the U.S. economy.
I think people are worried about the level of debt and the fact that we've reached a point. And by the way, this is true in the United States, but it's true in every developed economy where kind of fiscal stimulus and an aggressive fiscal play is really just kind of embedded in the way these democratic economies are operating. And it's accelerated meaningfully in the last 5 years. I think the pandemic, played an accelerating role, and it doesn't seem like we have an ability to pull it back. And so we've taken the debt, in the last 15 plus years, kind of since the financial crisis, from 7 trillion to 38 trillion. The path out really isn't a revenue path out. The path out is a growth path.
Yeah, that number will stick with you. In the last 15 years, the U.S. debt from 7 trillion to 38 trillion. That's a big number. Of course, that was David Solomon, chairman and CEO of Goldman Sachs, with Carlyle co-founder and co-chair David Rubenstein. To watch more of that interview, catch the David Rubenstein Show, peer-to-peer conversations. That will be on November 5th at 9 p.m. New York on Bloomberg TV. All right, so David Solomon also says he sees a low chance of a recession in the near term, and he says the path out, as we just heard, is a growth path. Investors, I think it's safe to say, Tim, that they're not looking at things like there could be any possible recession on the horizon, at least not for a while.
Yeah, even as Wall Street pumped the brakes on the stock rally today, Meta Platforms sank amid plans to take on debt to fund its AI push. That's the reason why it's lower, Carol. It's not that one-time charge. You called it yesterday as those numbers were coming out. You're like, that's what investors are concerned about.
It's been kind of wild, right, to see this trade. So let's talk a little bit more about kind of where we are. It's been a very busy week and full week again. Joining us is Bloomberg News senior editor, Equities Americas, Eric Weiner. He's right here in our studio. It has been a lot. Again, we've seen this story before. I do think it's interesting, and I always think about the news flow, Eric, and what we are focusing on versus what we should focus on. So let's focus first on what we are focusing on. Is that the big tech trade? Walk us through what we are seeing in today's trade and how much that is impacting the overall major market averages.
It is the overall major market averages. If you look at the actual performance of the market, actually, today is a reversal of yesterday. More stocks are up. There's about 335 last time I checked stocks up. And yesterday it was the opposite. So the S&P equal weight index was way outperforming, is way outperforming the S&P 500 normal index today. Yesterday it was the opposite of that. And really what you're seeing is overnight, Meta really getting housed, and Microsoft to a lesser degree. And it is that fear. If you look at what Meta is, the stock isn't actually all that heavily valued relative to other huge tech companies. It's among the lower end of the Mag 7, but what it does is it carries a tremendous amount of spending on AI. And that's kind of where people are getting concerned. When we talk to traders, it's when is this stuff going to start paying off? When are we going to see it? And then you see them rushing out with a very large debt deal, and suddenly it becomes, wow, they're going to fund this with debt. And people start getting concerned about throwing good money after bad.
Debt investors, right?
Yes.
That's essentially moving some of it that way.
Well,
what is the right read on that?
Well, so normally what they had been doing was taking it out of their capital, their capital funds. So they had the money. The argument was they have the money. They don't need to really worry all that much. And then suddenly you see this massive bond offering coming out, and you say, well, wait a second, they don't have the money on their books. And so they're going to be paying interest rates. And yesterday, Jay Powell was a little less doing a little bit less of the confirmation on the next rate cut, and also sort of sprinkling a little fear of inflation in there. So we don't really know what the path of rates is going to be. And if you take out, you do a big bond offering now, that rate expense, that interest expense is going to be on your books.
Eric, before we let you go, 30 seconds on trade, because we're going to be speaking with Caroline Freund in just a second. She's dean of the UC San Diego School of Global Policy and Strategy. We're going to read her full intro in just a second, but we're talking U.S. and China. We're talking trade. 1 year truce. Why are you laughing?
Because we get this all the time.
Exactly.
I'm waiting.
I didn't even ask a question, and you just started smiling.
19 or 20 days ago, we were arguing whether Trump deserved the Nobel Peace Prize for peace in Gaza. Is anybody saying that there's peace in Gaza? Things change.
I want to see dried ink on a deal.
Exactly. And I want to see the details. And we don't do details, and we don't really do, as you put it, the dried ink. So yeah, we're going to have a agreement of some sort that Trump can talk about, but what is actually the devil in the details, we don't know.
Yeah. Meanwhile, yeah, exactly. Tick, tick, tick. Maybe you have to just wait for another year. I don't know. Eric, thank you so much. Appreciate it. Bloomberg News senior editor, Equities America's Eric Weiner here in studio. So let's get to that U.S.-China meeting earlier today in South Korea between President Trump and President Xi. Deal, no deal? How about that 1 year truce? That's what they're calling it. The two did meet on the sidelines of the APEC summit. U.S. cutting the fentanyl tariff, extending the existing truce and reciprocal tariffs. China resuming soybean sales and rare earth flows. But maybe just a stabilization of relationships. Nothing more dramatic here, Tim?
I don't know. Let's ask Caroline Freund. She's dean of the UC San Diego School of Global Policy and Strategy, former senior fellow at the Peterson Institute for International Economics. She's global director of trade, investment, and competitiveness, formerly at the World Bank, and earlier did time at the Fed and the IMF. She's out there in beautiful La Jolla, California. So the news today, the one year truce, where does that bring us in the context of the relationship in the between the U.S. and China from a trading perspective before President Trump took office for the second time? Is it back to what it was then, or is there still tension from when from his policies early on?
Look, we have the world's top producer and the world's top consumer meeting, and they both have market power in their own way. And they need each other. And that's what we saw. It was effectively a game of chicken. Trump started it and Xi stayed in the battle, and both just put on the brakes. I think we're close to pre-Liberation Day tariffs, not necessarily close to where Trump came in. There are a few tweaks because we still have some of the fentanyl tariffs. U.S. firms are still facing this licensing regime on magnets. So there's still some things that are in place, but we're pretty close to the pre-Liberation Day tariffs.
Caroline, what is more significant, what they did talk about or what they didn't talk about, meaning Taiwan, TikTok, Nvidia's high-tech chips, those Blackwell chips, China buying oil perhaps from Russia? Like, there's some really important issues out there that felt like they were missing.
Yeah, and I think we're going to see that going forward. There's going to be ambiguity on all of those difficult issues. But I also think there's market discipline on the worst case scenario of an escalating trade war. So they both realized how much they need each other. The U.S. market is just impossible to replace. We account for 15% of total global imports. There just is no one else who's gonna take that. China accounts for the same 15% of global exports of goods. We can't completely replace China. So the countries have settled the deals that are or in the areas that really matter for them right now for their economies. But we're going to see a lot of ambiguity on those much more complex issues.
So were we played? Were citizens of both countries played? Were investors played? Did we kind of start at point A and go through the whole alphabet and then come back to point A?
Yes. I think Trump has tried the kind of bullying technique, and it's worked with everyone else. Early on, it looked like EU would also retaliate, but they're just too dependent on the US for security, and that's very important right now, so they didn't. China is equivalent to the US, and China said, no, we're not going to be bullied. We also have things you absolutely need. And now there's kind of a truce. And I think we'll see this muddling along with market discipline on both sides. It'll hurt the US too much to really do a lot more on China. It'll hurt China too much to do a lot more on the US. But in this period of truce, the most important thing is that we work with our allies to develop secure supply chains. So we are not dependent on China for rare earths in the way we are now.
So those allies, including Australia, Canada, where else?
Yeah, exactly. So the agreement with Australia is fantastic, and we should be looking for more agreements like that. Latin America has a lot of rare earths that could be explored that we're part of the Western Hemisphere.
But we have a complicated relationship with some Latin American countries currently.
Yeah, that's absolutely right. And so the strategy, we can't take on everyone at once. And China really is the biggest competitor, the biggest strategic threat to the US. And we should be working to have agreements with countries where we can both pull them out of the China sphere and where they have things we might need.
You couldn't possibly be thinking about the U.S. shooting on Venezuelan ships, could you?
Thinking about that, I'm thinking about, I'm absolutely thinking about that.
It's funny, not funny, right?
But I'm also thinking about Argentina.
Yeah, exactly.
It's complicated in a different way.
Well, Caroline, and I do think about the U.S.'s position in the world at large. Like, we still have trade agreements to be worked out with what used to be a big friend of ours called Canada. And yet that is still up in the air. How does the rest of the world feel about the United States right now against China? Because I do feel like there is this thinking about China domination. And so people trying to do alliances to combat that. So is the U.S., as we see it, do that deal with Australia and maybe reaching out, realizing it can't do things alone? Are things changing a little bit in terms of the U.S. perception by the rest of the world?
I hope so. And I think if Trump leans into these agreements where countries haven't retaliated and goes forward in a respectful way, we could see that, and we could see a lot more cooperation. But the problem is that so far the U.S. has proven to be a kind of unreliable trade partner. Deals are made, and then we back off from them, and then new threats come up, and that's really problematic. So I think there's a lot of distrust, a lot of dislike with the U.S., and that's going to be a hurdle to overcome. At the same time, other countries need the U.S. market. Again, we're the world's top consumer, and they need the defense from the U.S. So they will play, but it will work a lot better if we work on cooperative agreements than purely in this kind of bullying mentality.
We're going to hopefully talk to you a lot more between now and 1 year from now, but just make a prediction for us for 1 year from now. Will this truce hold?
Yeah, I think it will. There might be little glitches along the way, but again, the market will discipline Trump, whether it's the stock market, bond yields, companies complaining. And similarly, the Chinese economy isn't that strong. We saw, BYD tank today or recently because there's just not enough demand for Chinese goods.
Yeah.
So I absolutely think it will hold, but we won't get a lot more.
Yeah.
It'll hold, it'll muddle along.
And China continues to try and get that domestic economy going, but it's really been a struggle. Caroline Freund, she's dean of the UC San Diego School of Global Policy and Strategy. Coming up, we're talking big tech with Mark Mahaney at Evercore ISI. So much to cover.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks take a breather after multiple warnings about high valuations and a narrowing of participation. And in a busy week for tech, Meta shares, they are plunging now by 11.3% after predicting aggressive AI spending. The S&P is down 41, drop there of 0.6%. NASDAQ, the composite index, down 280, down 1.2%. The NASDAQ 100 index down 1%. The Russell 2000 index is down by 0.2%, and the Bloomberg Mag 7 index down 2.4%. 10-year right now at 4.09%, with the 2-year 3.60%. Gold up $77 the ounce, back above 4,000. 4,007 right now on the precious metal, up by 2%. Crude West Texas Intermediate 60.64 a barrel, up by 0.3%. And we're seeing a major sell-off today in Bitcoin, down now by 3.7%. Bitcoin at 107,317. Earnings news beyond big tech. MasterCard reported third quarter earnings that beat analyst estimates as consumer and corporate spending remain robust. MasterCard shares, they are a little changed right now, down under 0.1%. Rival Visa pushing higher by 1.4%. Apple and Amazon will be reporting earnings after the close of trading. We'll have a whole lot more on those companies coming up in just a moment, right here on Bloomberg Businessweek Daily. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Wait, Charlie, Apple's reporting after the close?
It is. We're going to be all over it because that is what we do here at Bloomberg. That's what we do on Bloomberg Businessweek Daily.
I'm kidding.
Cabbage night. Don't forget that, Carol.
It is cabbage night.
It's actually apple night.
I've never heard of that before in my life.
Don't you remember, like, you trick or treat and there's like the barrel of apples and you're like, really? Come on, buddy. I want the Reese's Pieces chocolate or something. All right. The AI spend is on. Got that. When Meta and Microsoft reported, Alphabet, Google, too, out there putting mega bucks to work on artificial intelligence. Charlie just talking about it. We've been all over it. Meta and Microsoft, as we just heard from Charlie, they are selling off in today's session. Meta, most notably, although according to people with knowledge of the matter, investors said to be snapping up a record $125 billion corporate bond offering from Meta. And then we do have shares of Alphabet. Tim, they are definitely rallying today.
So let's bring in our tech roundup and the voice that we want to talk to. Mark Mahaney, Senior Managing Director, Head of Internet Research at Evercore ISI. He's the author of the book, Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts. He joins us from San Francisco. Mark, I think we want to begin with Meta Platforms. It's down 11.2% right now. Carol mentioned the news about the $125 billion corporate bond offering. But is the stock down today as a result of what it said about CapEx next year?
Yeah, you got it right, Tim. So it's the CapEx and the total expense guidance that they gave for next year was more aggressive than the market wanted. This company, Zuckerberg, was very clear about it. He wants to be the AI leader. He's going all in on superintelligence, and investors are a little cautious and nervous about that.
Why aren't they buying it?
Well, maybe for 2 or 3 reasons, Tim. You're asking a really good question, which is why aren't they buying it? Well, maybe we don't really know what it is. So all of us are sort of scratching our heads because I guess we're not super intelligent. I'm not, but trying to figure out exactly what's going to come out of that. Like what's the product going to be? What's the offering going to be? And how are you going to monetize it? That's one reason. We just really don't know what super intelligence is quite yet. Second is it's very competitive. So Google's chasing it. OpenAI is chasing it, and Meta is, and there's probably other companies too. I should assume Apple and Microsoft are too. And I think the market's just a little skeptical. It is skeptical that Meta is going to be able to do this sufficiently effectively, generate a good financial return. So that's why it's really those 2 reasons. We don't know what that end market is, and the market maybe is a little nervous about Meta's odds against that unknown end market.
You know, what's interesting, too, and I've been thinking about this, Mark, is, and by the way, we're creating a super intelligence club right here at Bloomberg. So we'd love for you to join in the next club meeting. Hey, is part of it that, the spend for Meta, it's not like they're one of the hypers, they're not Microsoft or Alphabet who can kind of offload some of the spending on other companies. Is that part of it?
Yeah, I think that's right. I think you're right in saying that, Carol. That Amazon sells superintelligence or can sell AI services to other companies. Microsoft does through Azure. They have cloud services, and so does Google. And there's not kind of that obvious external commercial enterprise offering. Meta doesn't have that, so the return is going to have to be on Meta itself. And so that maybe at some level, that maybe that's the third reason why the market's a little skeptical. And today, and I don't want to overdo just a one-day trade, but today that's the third reason for the skepticism.
And so skepticism, smart, as we should be in any environment, especially when there's a big spend out there. You still have an outperform on Meta. So give it a little time, right, to kind of watch and see how this plays out.
Well, I'm going to take the opposite side of this. So this is what I've learned following Meta for a long time, but just in the last couple of years, this company aggressively invested in AI, and they used it to dramatically improve their core products. Instagram, WhatsApp, Facebook. What's the evidence? Well, consumer engagement has increased materially over the last couple of years, and advertiser returns have increased materially over the last couple of years. What's the evidence of that? Meta has probably got the strongest advertising revenue growth, 25, 26% at scale at 200 billion, revenue run rate. That's better growth than anybody else has in the, direct competitor has in the sector. Maybe I'll be surprised by one name in there, but I doubt it. So, to me, I step back and I think, well, they've actually shown a great ability to deploy AI to improve their core products. I'm going to give them the benefit of the doubt that they could probably deploy AI to create new products. And, they just start off with so much, I call them the 3 C's, compute, capital, and cranium, that there's probably going to be more than just one winner in superintelligence. And I think Meta has a decent shot of winning it. And by the way, I don't have to spend too much on this. The stock trades at close to a market multiple. And this is so different, Carol, than 3 years ago when Meta's core business was under attack, existential risk coming from TikTok, and they were throwing money at this thing called the metaverse. This is 3 years later, and there's no existential risk to core Meta. And in the meantime, they're throwing money into something or investing aggressively into something that some of the sharpest other technology companies are. There's probably a there if Amazon, if Google, if OpenAI, if Microsoft and Meta are all betting on or investing in superintelligence.
I do think about Meta a lot, when they came out of their IPO and reception not necessarily so good, and the pivot in terms of, was it mobile that they needed to think about more? And then they moved quickly, and then metaverse all in, and then maybe that wasn't right and they pivoted again. Like, there is something to be said that this company does look, Tim, at kind of what's going on and then making the necessary adjustment quickly.
Well, on that, Mark Mahaney, the idea of the cranium part of this, and maybe this is not what you're referring to when you said cranium, but we got to talk about face computers, this idea of the Ray-Ban Meta Gen 2 glasses, the runaway success. I was surprised to see how successful, or have been surprised to see how successful Meta has been when it comes to wearables. Our own Mark Gurman loves these things. When he tried them a few months ago, and the user interface is the next, you've covered a lot of cycles, is the next platform for computing wearable glasses?
I don't know. I guess I'm skeptical that it is. It's possible. I don't know why. I doubt there's one solution out there. I think wearable glasses can be one solution. It's probably more than a niche, but I don't know that it's mass market. So I don't know what something in the middle there. I guess I'm a little skeptical, but they've certainly, this product is a heck of a lot better than what I wasted money on with Google Glasses years ago. But all this stuff feeds on and builds on itself.
Well, I'm just having trouble then understanding where superintelligence comes into this. And like you said, we haven't seen this before, but if that's what the big bet is, and that's what all these companies are working on, how does that manifest in a product? Is it that Instagram just becomes that much better at knowing us, and that our targeted advertising is that much better? Is that it?
I hope there's more than that. I think the vision that's been that Zuckerberg has talked about just as much as anybody else, Sam Altman's talked about it, is a personal digital assistant. So an AI assistant that would not only find information, do research for you, help you figure out how to buy a new car, what are the best running shoes for you, but also help you perform tasks like maybe buy that car or buy those shoes for you at the best price and get them, with the fastest speed, and perform tasks for you, like help you book that family vacation, not in the average 3.5 hours that most families take, but in 30 minutes or 20 minutes or 15 minutes, and do all these tasks, kind of do them for you, and you can come back and have them done. So I think that's how to think about it. I'm hoping that all that comes together. Look, I spend a lot of time with Gemini. I've spent a lot of time with ChatGPT, and I've run it through its paces and doing projects and tasks like that. They're not there yet, but I see the potential and I see the ongoing improvement. So I think that's what we're waiting for, these personal AI assistants that are going to be able to research, find information, and perform tasks for us, and going to do it seamlessly and quickly. And that's what we're all sort of hoping for.
I just asked ChatGPT, who has superintelligence? No one. Superintelligence does not currently exist. And then I get a detailed breakdown. I was going to ask it to think harder, but we'll move on because I want to keep with Mark Mahaney. Hey, Mark, what do we need to know about Alphabet, which is actually rallying in today's session, and then a look ahead to Amazon? What's front of mind for both of those for you?
Yeah. Well, what I find so interesting, Carol, about Alphabet, it's just how much these narratives can change in just a 6-month period. By the way, that's one of the reasons I like Amazon, because I think the narrative here is pretty neutral or even negative. And that was the case. You'd gone back 6 months ago. I mean, Google's a star today, but it was trading at 15 times earnings, a dramatic discount to the market. They were going to get crushed by the DOJ. They were going to get crushed by ChatGPT, and nobody believed in them. And so we created a great stock buying opportunity. It's useless to you now, but that was my number one pick 6 months ago, precisely because I thought the market was just way too negative on Google. They just put up one of the best quarters I've ever seen them print. Accelerating search growth, accelerating YouTube growth, accelerating subscriptions growth, accelerating cloud growth. That backlog number was enormous, and margins kept going up too. So I just think that now we're going to get the stock got oversold. It'll probably get overbought. We're not there yet, but I bet you it will. And I continue to like it. I view it more as a compounder, though. I think you've had a huge move, like 100% in the last 6 months. That's well warranted, but I'm not expecting that kind of move going forwards. But I continue to like it here as a compounder. So that's what changed on Google.
Just 30 seconds on Apple before we let you go. What do we need to watch for today? What are you expecting?
I'm going to give you Amazon instead. And okay. Amazon, what really matters is this AWS growth. They got to print 18.5% or better. And then if you do that, there's a real unlock on the stock, because a bunch of the other parts of the business I think are doing really well. The retail business, the advertising business, and I really like this Kuiper satellite offering that they're going to roll out next year.
The job cuts, 20 seconds. Anything that we should know, or your thoughts on that? Like, is it a problem, or is this just what they kind of need to do after too much hiring?
No, I think, there's probably a little too much hiring in the past, but I think this is the sign of AI efficiencies. And, that's just, it's going to cause a lot of disruption. At the end of the day, I think it's still going to create more jobs. But yeah, I think they're doing it for efficiency reasons, not because they're forced to cut costs. I think that they're doing it because they can cut costs.
All right, folks, that's superintelligence. I'm just going to put it out for you. Mark Mahaney, thank you so much. Really a great overview. Managing Director, Head of Internet Research at Evercore ISI, author of Nothing But Net, 10 Timeless Stock Picking Lessons from one of Wall Street's top tech analysts. Hey, when we come back, we're going to talk about the women's disease.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Little change now in the Dow Jones Industrial Average, up by 14 points, up under 0.1%. S&P trading lower, down 44 right now. The S&P 500 index down 0.6% now, while most shares in the S&P 500 are actually higher. A slide in several mega caps is dragging down the gauge. The S&P lower by 45, down 0.6%. The Nasdaq Composite Index hard hit today, down 1.2%. Nasdaq down 290 points. The Bloomberg Mag 7 Index down 2.5%. Meta is lower by 11.1%, and Microsoft down 3.5%. 10-year at 4.08%. Gold up $82 the ounce, back at $4,012. For the precious metal, a gain right now of 2.1%. West Texas Intermediate crude down 9 cents a barrel, down 0.1%, 60.39, and Bitcoin down 3.9%. 107,062 on Bitcoin. After earnings, Eli Lilly shares, they are trading a little changed right now. We have got Eli Lilly raising its full-year guidance as revenue from its blockbuster weight loss and diabetes drugs beat analyst estimates in the third quarter. Lilly shares, by the way, are up 4.6%. Merck after earnings down 1.2%. Biogen after earnings higher now by 2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, earlier this month, Bloomberg reported out on how researchers have uncovered how the body's own immune system may be driving the progression of ALS, a breakthrough that could reshape treatment of the fatal disease. But what's key, in a big, broader way, the findings could lead to therapies that target the immune system and may have implications for the treatment of other neurodegenerative diseases, and that includes things like Alzheimer's and Parkinson's. So let's get to our weekly Business Week Women's Health segment. We focus on key issues and developing technologies impacting the present and future of women's health around the world. Our focus today is on Alzheimer's, which affects over 7 million Americans today. By 2050, that number is projected to rise to nearly 13 million, according to the Alzheimer's Association. With us is Dr. Fanny Elahi. She's Associate Professor of Neurology and Neuroscience at the Icahn School of Medicine at Mount Sinai, and she joins us right here in New York City. Dr. Elahi, thank you so much for being with us. I am curious, when it comes to neurological problems, what are the difference in what affects women versus men?
It's a pleasure to join you. The short answer to that is that we know the statistics of what are the diseases that afflict women at a higher prevalence than men, and one of them is Alzheimer's disease. But to say that it would not be correct to say that we understand the why. And I think this is exactly why we need to be doing research, because getting the answer to why are women's brains more vulnerable to Alzheimer's disease and other kinds of neurodegenerative disorders may hold the key to understanding how these diseases strike the vulnerable brain. And so that knowledge will definitely help women, but I think beyond that would help us understand what are the key factors that make the aging brains vulnerable to Alzheimer's disease.
At this point, what do we know? What are the clues or what are the hypotheses that medical professionals have established?
A central hypothesis that we and others are following is that in women's lives, there is a huge physiological transition in midlife due to menopause. That shift in hormones that the brain and other organs see is unique to women. It happens in men, but at a much later stage in their life. And so what we are doing at Mount Sinai is to specifically query the impact that lower levels of estrogen may have on the cells that form the vasculature of the brain, the protective barriers of the brain, and other cells within the brain.
So is an easy fix, just keeping the hormone levels higher? And I know that there are consequences to doing that potentially. Like, how do we think about, or how do you guys think about R&D and what can be done to help women, since they are certainly, it sounds like, more vulnerable as a result when it comes to Alzheimer's?
Absolutely. We certainly hope that for those who can get hormone replacement therapy, that may diminish their risk to a certain extent. But the question is, when do those hormones need to be started? And we think it needs to be perimenopause. You cannot wait too long before starting them. The second question is, how long do you keep those hormones? As you alluded to it, those hormones also increase the risk of other things such as cancers. And those risks increase as women age. So how long do you keep someone on hormones in order to decrease their risk for Alzheimer's disease, which is a late life phenomenon? And then the third question is, for the many women who actually cannot be on those hormones, what can we discover about what those hormones do, and just go ahead and develop drugs and interventions that activate or deactivate those pathways?
What about genetic components? If somebody else in the family has had Alzheimer's, that trait being passed down, does that happen?
That's an excellent question. And in fact, one of the most prevalent genetic risk factors for Alzheimer's disease, the ApoE4 allele, we think interacts with hormones in exerting its effect on Alzheimer's disease. Now, the question of heritability of Alzheimer's goes beyond just ApoE4, and that in of itself is a really big area of research. There are other components of the disease, such as metabolism and mitochondria that we inherit from the maternal side, for instance, that could be contributing to this heritability. But even beyond that, there are aspects of our ancestry that continue within us in forms that we currently don't fully grasp, and I hope we will understand in the future to again contribute to better therapeutic developments.
So talk to us a little bit about, you've done a lot of work when it comes to blood biomarkers. Why might this be important here?
Blood biomarkers are very exciting because similar to other disorders such as cardiovascular disease, cancer, kidney, liver disease, you really want to detect disease before individuals have prominent symptoms that bring them to the medical attention. And in the case of Alzheimer's and other kinds of neurodegenerative disorders, those are cognitive impairment and ultimately dementia. At the point that someone has very significant cognitive changes, we think we could potentially slow down disease progression, but to say that we can stall it or have game-changing treatments completely change someone's brain trajectory would be not realistic. So these blood biomarkers can detect risk of future symptoms with increasingly better predictive ability. One thing that I should mention is that we don't think that the pathologies that eventually lead to dementia start at the time that symptoms present. They really start decades before.
Wow.
And these blood biomarkers for Alzheimer's disease are detecting that. My lab works on expanding that panel because right now we are detecting only a few aspects of the disease. We think a key component of Alzheimer's and other neurodegenerative diseases are the changes that happen to the blood vessels of the brain. And at the moment, we have no biomarkers that detect vascular pathologies with great precision.
Dr. Elahi, we just have about 30 seconds left. Are you optimistic that during your career, we will see a major breakthrough in either treatment or prevention of Alzheimer's?
Absolutely. I'm going to go further in saying that I hope that it's not at the end of my career. I have great hope for the decade that is to come. We already have 2 FDA-approved treatments that slow down disease progression, and many other game-changing treatments are in the pipeline.
Well, we so appreciated getting a chance to talk to you, and you really like laying it out so clearly and specifically. Dr. Fanny Elahi, she's Associate Professor of Neurology and Neuroscience at the Icahn School of Medicine at Mount Sinai, joining us on our Women's Boston Children's Health segment.
You know, taking a look at markets right now, Carol, down on the S&P 500, 0.6%. The NASDAQ taking a hit with Meta Platforms dragging down that index, down 1.1%. The NASDAQ, the Dow, higher right now by just about 0.1%.
Looking at Apple, they report after the close. That stock up about 0.2%, and shares of Amazon ahead of their earnings, seeing that stock trade down about 2.5%. We're counting down to the close. This is Bloomberg.
You're listening to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading. It's a big day again. 2 of the Mag 7 reporting, of course, Alphabet and they did that. Apple and Amazon. It's one of those A's. The other A's. Yeah. You should have seen Tim and I feel like
this week we just couldn't.
We're like, wait, Microsoft, Meta.
If only there was some sort of acronym that, you know, kept some of these companies.
Funny. Hey, quick check on the trade here. S&P 500 just down about 41 points, down 0.6%. Dow in the green, just up 0.1%. NASDAQ 100, obviously feeling any of the impact of those Mag 7s because we have seen Meta and Microsoft trading lower today. NASDAQ 100, Tim, just down about 1%.
I'm Tim Stenovec along with Carol Massar. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Denitsa Tsekova. Denitsa, I think you're looking at some of these companies that reported.
You can never get enough of Meta. Meta Platforms still down 11% today. But the more interesting story to me is what's happening in the corporate bond market. So the ticker, of course, is META. The stock tumbled as much as 14% in earlier trading. Of course, it comes after Mark Zuckerberg warned that the company will need to spend even more aggressively on AI, which is not the first time he does this. So perhaps that is not as surprising. But what we're seeing in the bond market is really impressive. Meta Platforms said they're planning to sell 30 billion of investment-grade bonds. And the demand we're seeing there from investors, it's absolutely unprecedented. 125 billion of orders for Meta bonds, surpassing the biggest deal before that, which was for CVS in 2018. So really big demand there. Very different reaction in the stock. We're definitely not seeing that insatiable demand at the moment. Revenue for the company rose this year. We saw ad revenue doing well. So fundamentals clearly are doing well, but we saw a lot of downgrades today. One of them was Oppenheimer. It downgraded to perform from outperform, saying investors will struggle to rationalize the PE. And then Benchmark downgraded to hold from buy, saying the company will be range bound. After the big drop today, the company is up only 14%. And we remember, like just a few weeks back, we were talking about kind of relentless rally, and we can see one day of turmoil, how much of the heat it takes off.
Just one day, though. So
Just
we have
one
to
day.
or one quarter, I guess.
One quarter.
I guess we have to wait and see, right?
Yeah.
Like what it all means. As I think about the conversation we had with Mark Mahaney.
Yeah, if you missed that conversation, check it out on our podcast feed. He's been covering these companies for years. And there are some idiosyncrasies with Meta's spending that you brought up.
Yeah.
That don't make investors look at it the same way as other companies that are making those investments that can then sell that capacity.
But he basically talked about how they're monetizing it in terms of ads, right?
He's sticking
on their
by his
platforms.
buy, right?
He definitely has outperformed. He's got on that company. Hey, let's get to one that's having a tough time in today's session. Shares of Chipotle.
Chipotle is having a really bad day. To be precise, on intraday basis, it's the worst day since 2012. The ticker is CMG. Shares plummeted after the chain cut its outlook for a third time this year. And we're worried about young diners. They pulled back from eating out. And obviously there has been a lot of concern about consumer spending, and this is adding up. It's not only Chipotle. We're seeing similar sign from Shake Shack. In the third quarter for Chipotle, comparable store sales rose slightly, but fell short of what Wall Street was expecting. Chipotle shares fell as much as 22% in earlier trading. We actually saw some dip in Kava and Sweet Green, so definitely the industry is reacting to this. The company saw a broad pullback in visit frequency. About 40% of the company customers come from households that make less than $100,000, and we're seeing a pullback there, and that's very worrisome for the economy. And for young people, no longer eating Chipotle, I guess.
I will tell you, this is totally anecdotal.
Yeah,
And I never
talked
go out to
about
lunch
this.
because of our schedule here. But yesterday we had Fed Day, so I had some time to go.
Because we're not allowed to
get
eat
some
lunch.
No,
No,
we're
just
allowed to eat lunch. I bring it usually. So I treated myself to one of these fast casual places. Yes, I went a little later than the lunch rush.
Yeah.
There was only one other person in there.
Oh.
I was like, this is not good. Usually there are long lines at these places.
So is it a company story? Is it something more broadly in the economy?
It wasn't a Chipotle. It wasn't a Chipotle.
I feel as though there is definitely a little bit more of a trend. That's quite a few companies are doing well. We're seeing Chipotle and Shake Shack, some of those are being hit. Also, people are eating healthier. Maybe that's part of it. Everyone's talking about
I thought Chipotle was kind of healthy, to be honest.
Maybe compared to Kava and Sweet Green, they're maybe a little bit healthier. Not that they're doing well. They're also following on the news.
Similar-ish.
Yeah, I think it's
just
a little
get a
bit
bowl,
healthier.
skip the tortilla, right?
Yeah.
Don't get the chips.
Yes, no chips.
What's the point?
Use salad as a base. It depends. You can make it your own.
20 seconds on Comcast.
Comcast, pretty bad day. It actually was up initially after the earnings result, but it lost 100,000 subscribers. This is the 10th quarter when they see a loss in subscribers. It was actually less than what analysts expected. The revenue also beat estimates, but that said, it's just been a business that's been struggling for a very long time, down 30% year to date, and it's just pretty much a story of losing competition to streaming and internet providers.
Ticker is CMCSA for those interested. Denitsa, thank you so much. For more conversations like this, do check out our Stock Movers podcast. 5-minute episodes, biggest winners and losers. Find it on Apple, Spotify, or anywhere you get your podcast. Yeah.
We're going to talk to Red Brown in just a few minutes about the struggles of Starbucks and Chipotle and what it says about the consumer. That's just one thing coming up on Bloomberg Businessweek Daily next.
If you're watching on TV, the close coming your way in just a moment. Tim and I continuing on Bloomberg Businessweek Daily.